Hi everyone, I'm Valentin, and we're gonna talk about MEV today. A really exciting topic, a little bit technical. There are many things we'll go through, and I hope we have enough time for questions after that. So first, a few words about me. I'm a software developer. I've been doing software for over 20 years, and I started working full-time in crypto 2017. I was a CTO of a blockchain analytics company called Santiment, and in 2020 I started doing yield farming, and I started doing it on my own, and then angel investing. Currently I'm part of Daedalus Angels. It's an angel collective. And on the MEV front, I did a little bit of AMM arbitrage and some NFT sniping. So if you tried to mint an NFT and your gas was very high and you couldn't, maybe I'm one of the reasons for that. Sorry about that. So let's first see what is MEV. So first, MEV was standing for miner extractable value. Right now the term is maximum extractable value, and the definition is that this is the additional funds that the miner can extract when producing a block on top of the fees that he's getting. Now this income is coming from either rearranging the transactions in the block in a certain way, or maybe inserting transactions in specific positions so that he can extract some additional value out of it. So the way it works is that the miner is going to find the next block, and then he has a bunch of potential blocks that he can build. So he has like superpower at this point, like he's going to make the next block. So the miner comes to decide what's going in and what's been left out. So what the miners are going to do is they're going to maximize their profit. So they have a bunch of potential blocks, they're going to estimate how much they're going to earn out of them, and they're always going to pick the one with the biggest earning for them. Now, let's see a couple of examples, like how exactly this looks like. So one of the MEV things is the so-called DEX arbitrage. So it's very simple. You buy, for example, you see there is a difference in price between, let's say, Uniswap and SushiSwap for ETH. So you buy on Uniswap for cheap, like for $2,000. You sell it immediately on SushiSwap for $2,100. You pocket the difference. It's a risk-free profit. You do this in a single block, so you're not exposed to the price of ETH at all. You just do pure arbitrage. And in order to do this, you need to bid against other people doing the same thing. So you're not going to be the only one seeing this opportunity. So let's say the opportunity is going to earn you $100. Then another person also going to find like there is $100 there. So now you can bribe the miner and say like, I want my transaction to be first. And you tell the miner, I'm going to give you $50 to include my transaction first. And you give, let's say, half of the profit to the miner. And then the other guy will be bidding over you. So you need to be very fast in like monitoring who else is also taking these opportunities and bidding against them. Now, keep in mind that you can have also circular arbitrages. So you start from ETH, you convert, let's say, to USDC, then you convert it to Bitcoin, and then you convert it back to ETH, and you have more ETH at the end. So depending on how much you earn, the bigger bribe you can afford to give to the miner. Another MEV that is considered like a good MEV. So the previous one is a good MEV because it makes the markets more efficient. It's going to equalize the prices across all markets. Otherwise, you see different price everywhere, so that's not good. The other example here is liquidations for lending and borrowing protocols. So the way this works is that all these protocols, like Aave Compound, they update their oracle that decides what is the price of ETH at the moment on a regular basis. So maybe like every 5 minutes or maybe every hour. With MakerDAO, it's like every hour. So when this update of the oracle comes in, this is when the status of all the loans could potentially change. So let's say the next update, Ethereum price drops 10%, then you can have a bunch of loans that will be under their minimal collateralization ratio. So now you can liquidate a bunch of these loans. So what MEV searchers are doing is they're looking for these oracle updates. They're gonna see that a certain amount of loans are going to be underwater, and they're trying to backrun the transaction. So they want to be immediately after the Oracle update and liquidate the biggest loans and take the profit out of that, because there is like a 5 to 10% liquidation penalty. So if you have a loan for $1 million, you can earn like 100K from this liquidation. So there is a very good incentive to actually perform this liquidation. So now you have a bidding mechanism to be after a given transaction, the so-called backrunning. Before the so-called Flashbot system that we're going to talk a little bit later, there was no good way to backrun transactions in Ethereum. It's easy to front run, you just bid more gas, but to backrun you can't really do it. So what was happening, people were spamming the network with a lot of transactions, hoping to be the next after this Oracle update. So this actually caused a lot of problems that we're going to talk about a little bit later. So this is good MEV because it keeps these lending borrowing protocols solvent. If you don't have somebody liquidating the bad loans, then these loans are going to become underwater and these DeFi protocols are going to lose money. So this is good MEV. And the final example is the so-called sandwiching swaps or sandwich attacks. And the way it works is that when you have a swap being submitted to the network but still not executed, and it's for big enough money, what you can do is you can front run the swap and increase the price of the asset that the swap is going to do. Let's say user wants to buy ETH. So you front run the transaction, you increase the price of ETH a little bit, then the user swaps against this inflated price, and then immediately after the swap you back run the transaction, you sell the ETH that you bought on the first step at a little bit bigger price, and you pocket the difference. Now, this is actually bad MEV because the money here are coming from the user. So why is that possible? It's possible because user specifies certain slippage of the swap. And if this slippage is large enough, then you can pocket the slippage. Or the user maybe specified a wrong price, and then you can exploit the user. Now this is an example of bad MEV. It certainly happens. You need to be really careful when executing bigger swaps to specify your slippage and the price properly, because you're going to get rugged. Now, let's look at brief history how the whole MEV thing actually happened. So, in 2019, there was a paper called Flashbots 2 from Philip Dian, and he analyzed this kind of arbitrage transaction happening on the blockchain. And he figured out that there are actually millions of dollars being made by these bots that are exploiting this MEV thing. So at that point, he figured out that MEV is actually a very important part of the blockchain. It's very important incentive. It's a very important factor that changes the behavior of like miners and validators and everyone else. So it's something that we need to keep in mind when we build these systems. So 2020, the DeFi summer happened, and there is a lot of liquidity now on the blockchain. So these opportunities start to grow a lot. So now the money that we're talking about are much bigger. And at the end of 2020, that was the latest, I would say, existential threat for Ethereum, because the money that were being run in this economy were so big that people were spamming the network with a lot of these transactions, and the user experience were starting to become really bad. Like most of the transactions in some of the blocks were just failed transactions that couldn't backrun the proper target. And if you want to just do a regular thing, your transaction is not included in the block. You need to wait a lot of time. Gas prices are very high. So it was really, really bad situation. So at that point, it started to become like, okay, could MEV actually kill blockchain? Like the whole idea behind blockchain. And it was really like a scary thing to look at. So then Flashbots came and saved the universe. And we're going to see what Flashbots is on the next slide. So what is the situation now? The situation now is that for the last couple of, since this MEV started being analyzed, there is over $6 million being put there at least, like this is the lower bound. For the last 30 days, there is $21 million in this economy. So it's quite a lot of money on the table. 50% of the blocks include MEV, so it's definitely part of the blockchain. Now, you need to keep in mind, miners are not exploiting this by themselves. Miners have enough trouble to run their mining operation. So they rely on so-called searchers to do that for them. So they make this special channel with parties that are running these bots, and they just give them the bribes through that. And we're going to see how that happens. So around 1/3 of the MEV revenue goes to the miners. This is like the bribes. 2/3 go to the searcher themselves. So let's see in a few words what Flashbots is and how it fixes this whole thing. So Flashbots is a special version of Get that miners run on in their operations that has a special API that allows you to submit these bundles of transactions that you want to be executed. So now the whole MEV is actually in a separate mempool. It's not on the public mempool. You don't need to spam anything. You just use this API, send a bunch of transactions and say like, I want to execute this sequence of transactions and I'm willing to give you this amount of money if you do that for me. So now all the bidding happens there. All the regular users are on the public mempool. Everything's good. So the blockchain is free of spam and you have a proper marketplace for this thing. Now everyone could be involved. He can become a searcher and start extracting MEV. Now you need to keep in mind that MEV is literally in every blockchain. So it's not a Ethereum specific thing. Like every blockchain that runs a smart contract, so it's not like on Bitcoin. But every blockchain that runs smart contracts is going to have MEV. So it's going to be on Avalanche, on Phantom, everywhere. Now, not all these blockchains have Flashbots. So if they continue to grow, they're certainly going to have this problem. So here's the question, like, can MEV actually be prevented? And there are two schools of thought here. One considers that there is a way to do a fair ordering of the transactions so that miners can't tinker with that. And the other school of thought say like there is no way to actually do this securely, and MEV can't be prevented. It can only be mitigated on, let's say, the application level. You need to keep in mind that MEV is actually not blockchain specific. It exists in traditional finance. And a good example for that is Robinhood. So Robinhood is a commission-free stocks trading application. And the way they make money is they resell their order flow to bigger players that use that to exploit this order flow. So it's very similar. So now, you always have someone in the system that at some point has a little bit bigger privilege, maybe in ordering or executing these orders that could extract value out of it. So MEV is existing in the real world also. Now, one development is the so-called Chainlink Fair Sequencing Service. And in one sentence, the way it works is that it monitors when transactions arrive on the mempool, and if most of the nodes see that a given transaction arrives before another one, then it should become first. Now, there is a lot of wiggle room into that thing, so it's not super certain, and it's actually research. So it's not clear whether this is going to solve this problem, but it's one part of the research there. Arbitrum is also working on their own fair sequencing. I think they initially wanted to cooperate with Chainlink, but I think they work on their own solution now. And just to reiterate, even for Arbitrum and Optimism, all these rollups, they also are exposed to MEV. So we need to keep that in mind, and we're going to see actually why is that important and how it changes the incentives in the system. Now, let's look at some interesting example for MEV, outside of the examples that we saw, stuff that I've been asked by people that are interested in the topic. So one very interesting MEV is the so-called reorg MEV. So this one, the idea is to bribe the miners to mine not on the latest block of the network, but on an earlier block that happened earlier. Now, here's how it's going to work. And one example how it can happen. So in a given block, let's say T-2, you have a loan for $10 million on Aave, and on the next Oracle update is going to be liquidated. So we're talking about $1 million bounty, whoever manages to liquidate that. So on block T-1, the owner repays the loan. So he saves it, he puts more ETH as a collateral, or maybe repays the loan or whatever. He saves the loan. Now, the Oracle update comes on block number T, and there is no liquidation. So the loan is saved. Now, but you have $1 million that if you can make if you potentially liquidate the loan. So what you can do is bribe the miners and tell them, I'm going to give you $500,000 if you build on top of block T minus 2. And when you start building on that, I want to build an alternative chain where the repayment of the loan is not included. So you push out the repayment, and then when the Oracle comes, you liquidate the loan. You take $1 million, you pay half of it to the miner, and you're happy. As the liquidator, the owner of the loan is not really happy. Now, this is actually a real thing that could potentially happen, and it could be viable for miners to do it. I mean, they can, if it's big enough loan, it's enough money for them to actually stop mining on the top and go on an alternative chain. This was first proposed by Edgar, who is an MEV searcher, and he wanted to actually build an MEV get version where there could be marketplace for this thing, so people can bid for reorgs. And he forfeited the idea after Vitalik came to him and said, wow, that's not a good idea, because actually this is going to break the usability of the blockchain. What is going to lead to is that the tip of the blockchain is going to be super unstable, and the user experience is going to be terrible. Like, you submit a transaction, you get it confirmed, and after, I don't know, 30 seconds or 1 minute, your transaction is out of the blockchain now, because a reorg happened. So, because the tip is going to be very unstable, this is, it's going to be awful for the whole blockchain system. So, this effort was abandoned, and also, theoretically, miners shouldn't be accepting bribes like that, because they're going to break the whole blockchain system if they do that. I mean, they're going to earn money, but then the whole system is at risk if they really do this. Another MEV is on layer 2. So some people are asking, okay, so for layer 2, is there MEV on that? Well, sure it is. So the way layer 2 works is that you have a sequencer that is going to accept transactions as you submit them, and they're going to execute them immediately, include them in a bundle, and then on a regular basis they publish the bundle on layer 1. Now, this sequencer has the superpower. Like, if, for example, a swap comes to the sequencer, nobody stops him from sandwiching this swap. If the sequencer sees a given arbitrage that he can do, sure, he can do it, and he can earn money from it. So MEV definitely exists on L2. Right now, all the sequencers are run by the teams themselves, so Arbitrum and Optimism, and it's believed that they don't do MEV at the moment. Something that needs to be kept in mind is that these sequencers, they give you confirmation of the transactions immediately. So you submit the transaction, if somebody used L2, he knows, you submit the transaction, it's magical, it gives you confirmation immediately. So, yeah, everything good. So it's great user experience. Now, if you want to maximize the MEV, you might need to increase the latency. So if we see that the sequencers are starting to confirm the transaction slower, there is a chance that they're actually trying to extract MEV. So that's something to keep in mind. So in order to mitigate that, these L2s, they try to implement this fair sequencing thing. As I said, Arbitrum are working on that, because eventually they're going to decentralize the sequencers, and now you can't rely on the teams that they're going to be honest, let's say, and they're not going to do funky stuff. So when these sequencers become decentralized, the problem is going to be increased. So teams recognize that, and they're working on trying to fix this. And now a very interesting one, which is the cross-chain MEV. So here the example is very similar to the one we saw before that, where you have two dexes and the price is different. You can pocket the difference if you execute 2 trades or more. But now the dexes are on different L2s, let's say. So one is on Arbitrum, another is on Optimism. So here, you need to have funds on both layer 2s in order to do this. You need to have, let's say, you need to have dollars on Arbitrum to buy ETH at $2,000, and now you need to have some ETH on Optimism, because bridging takes time. So you're going to lose the opportunity. You need to execute it immediately. And you need to sell it on optimism. But now, because it's cross-chain, now you have risk. It's not atomic. So what could happen is you buy on Arbitrum, but then you can't sell in time on optimism. Somebody manages to close the opportunity there. And now you hold it, and maybe the market moved against you and you lose money. So as an MEV searcher, you don't want to lose money. You want to do things as atomically as possible. And now you have the incentive to actually centralize the sequencing. So if I control both sequencers, I can execute this atomically. So let's say jump trading becomes one of these decentralized sequencers, and they control, I don't know, 10% of the whole like sequencer voting, or maybe they do it for ETH2 or whatever. Now 10% of the time, potentially they can execute atomic arbitrages risk-free. So they're going to have more money, and they're going to pay more to get more validators. So the whole thing actually leads to centralization of the sequencers and the validators because of MEV. So there is some research how to fix that, and yeah, we can talk about this here because it's pretty much the same. So in ETH2, you also have MEV. So ETH2 is not solving the MEV problem. There are a couple of differences though with the proof of work ETH. One of the differences is that the validators are known up front. So you know after a couple of blocks who is going to produce a given block. And now there are certain things you can do with that. One is you can submit bundles encrypted with the public key of the validator. So only this validator sees your transactions. So you have like a secure channel with the validator that you're interested in to bribe. Also, the block time is going to be fixed, so now it's much easier to strategize your searching. You can adjust your algorithm, so you know that you have, let's say, 10 seconds in order to evaluate everything and then submit your bribes. So one of the researchers if you read Vitalik's blog post called Endgame, I definitely recommend you that. It's one of his latest blog posts where he describes how he imagines like the future of blockchain. There is something he talks there which is called the proposer-builder separation. So this PBS. And you're going to see him talking about this a lot. So the idea is the following, like proposers are the validators who mine the blocks. These are the ones that have the ability to publish a block. And builders are going to be separate decentralized party that builds the blocks. They decide what will be the sequence of the transaction. So these are the ones that are doing all the MEV extraction. And then they publish the blocks to the proposers and tell them, this is how much money I'm willing to give you if you use this block. So this way, the proposers, they stay relatively decentralized, because we believe that ETH2 will be super decentralized with like a lot of validators from a lot of parties. And the builders are going to be, like we're going to offload this MEV problem to the builders. So proposers don't need to think about all this MEV thing. Like we remove the MEV from the consensus layer, basically. Here actually it's the opposite though. The proposers could potentially be centralized as we saw it with the sequencers in the L2, but the builders could be decentralized system. But now you have a problem of censorship. So builders can decide that they don't like a given address, they don't like certain transactions, they're not going to include it in their blocks. So in order to have this working, this PBS pattern, you need to have a censorship-resistant channel. So a channel where you can submit transactions and be sure that they're going to be included in the block in order to tackle this. So there are certain ways that we can try to do this, but as I said, this is being researched now. It's not clear what that will be. For L2, there is a special inbox where you can submit transactions and the sequencers needs to include them. For ETH2, it's not completely clear how this is going to be achieved. So what should we do if we build dApps? the main thing is we need to create contracts that don't incentivize spamming. And also we should have protections for our users against MEV. We should identify where are the potential MEV extractions. And a simple example of that is Uniswap, you have this slippage. So you need to be able to allow people to specify slippage or calculate the slippage properly so that they don't get rugged. So MEV is not good or bad, it's a factor out there that is very important for these decentralized systems, and we need to be aware of it and build them in a way that it doesn't make the whole system collapse. So that's it. Thank you very much. And if you have any questions, I'll be glad to answer. I think we have 1 minute.
Hi.
Yep.
Thank you for it. This was very educational. Question is regarding reorg MEV that you mentioned. This Edgar that came up with that idea. So, if I understood correctly, he just stopped with the idea. What if some anon actually do this? Is it possible or not?
It's possible, and here the main idea and why we believe that it's not going to happen is that if miners actually, if somebody creates this version of GET, because it's literally writing some software, and then miners can run this software, they should be incentivized not to run it because the blockchain is going to become so unusable that their business as miners is going to be threatened.
Okay, I understand. Thanks.
Yeah.
Great presentation, thanks a lot. I was curious, since there's arbitrage like between centralized exchanges, right? With time you could see that perfect markets make the competition harder, right? And so each time you're fighting for less and less money. I'm curious if you can talk about your own personal experience with MEV. Do you see like trends of like more competition, less earnings and stuff like that?
Yeah, sure. So the way it works is that all of these opportunities, when you see an opportunity and it looks good and you can make money out of it, initially you might be able to do that. But the thing is, because blockchain is public, then other searchers are going to see what you're doing. Maybe they're not going to see your smart contract, but they're going to see the operations that you do. And now they're going to figure out, like, okay, well, I can also do that. And now it becomes like a race to the bottom because you start to outbid each other. So let's say there is an opportunity for $1,000. You offer half of it to the miner, but then another person sees that and he's willing to give like 600. Then you put 700. So it becomes like a bidding mechanism where most of the reward is going to go to the miner eventually. So you need to update your opportunities constantly. So for example, with NFT sniping, it was like super profitable. Like you can make really a lot of money out of it, but then a lot of people started doing it, and now it's not profitable anymore. So it's just this is how the business works. Like the moment when enough people start doing it, it's not profitable anymore. And what is happening right now, from what I hear from searchers, is that there are around 20-30 teams in the world doing this, like seriously. And if you start doing MEV extraction on your own, there is a high chance you're going to be outrun by these teams. So it's better to maybe join a team. Generally, if you really want to go into this space, I would recommend to go for the long tail. So that means opportunities that are relatively small, that big teams, maybe they don't look at them because there is not so much money in them, or maybe on some other blockchains that are still not so popular. But yeah, as a whole, it's a super sophisticated computer science problem. You need to write very optimized software, very optimized smart contracts. You usually need to plug both, like on-chain with a smart contract and also on the node level to be able to evaluate things quickly. So yeah, it's a very interesting challenge, but yeah, you can burn out easily, and the reward is kind of going down over time, I guess, being captured by bigger teams.
Thank you for the presentation. I have a question. If in Ethereum too, you have, validators up front, and you use also MEV in some way, like encrypting the message, is this not another incentive for denial of service attacks on the validator? So you see the transaction.
Yeah, I mean, if you know the IP address of the validator, potentially you can try to DDoS him. For now, as the beacon chain was running, we don't see this happening. I'm not sure how big of a threat is that, to be honest. So I guess validators probably have some ways to mitigate this problem. Maybe, if they also know that they're going to be chosen up front, they can have like a backup machine somewhere. If one of their machine got DDoSed, they can offload to another one to produce the block. So I guess maybe it's going to be something like this.
Okay, thank you.
Hey, great presentation. I was looking forward to this since the start of the project, of the conference. In the same line as two other questions that got asked, Edgar Anuth, he's actually an open source builder. He builds in public, and he's been building MEV since MEV was coined or since the crypto industry knew. But now, since they've teamed up with Dean, they're doing Project Blanc, which is basically MEV everything. My question then is, everything gets very centralized. And so then attacking the DDoS of a validator that you know is going to front run you, is that a way to slash them or penalize them in some form? Because otherwise, ETH just gets more and more expensive to use in general. And like you said, ETH2 is not solving the MEV problem. So it's like MEV good or MEV bad? Like, what is the answer? How do you solve this?
So, as I said, in the blog post of Vitalik for Endgame, he considers that generally the block production is probably going to become more and more centralized. So the way to kind of tackle this is to have this censorship resistant thing, because this is the biggest threat. The threat is like, it's not that validators are going to publish invalid transactions or drain, I don't know, Uniswap contracts or anything like this, because they can't do it. But they can censor. So you need to have a way to protect from this censorship. And the research, the way it's structured is that you try to calculate how much money it's going to cost you in order to run a censor attack. And one of the challenges right now is that with ETH2, potentially it becomes cheaper to censor. So the research right now is how to increase the price of censorship. So it's definitely a challenge, and people are trying to solve it. But yeah, I mean, I'm excited about ETH because if somebody actually manages to tackle this problem, I think it will be Ethereum. And the thing is that this problem, it's present in every blockchain. Like, for example, blockchains like Solana, they're also very centralized because you need very powerful machines to run your validators. So they're centralized because of that. So yeah, I mean, research is ongoing.
Do you think fast finality is, like, for instance, like Cosmos has fast finality, the Tendermint consensus churns blocks very quickly. Do you think faster processing of blocks is a solution to front-running bots on MEV? Or
I don't think that would be a factor.
It's not a factor.
I mean, yeah. It's the time for finality is, I mean, probably it could solve the problem with reorg MEV, but not about everything else. I mean, as you're producing the blocks, you always have the incentive. Oh, I see this swap. I can extract a little bit of money out of that. So you're eventually going to do it. Like, it's going to take some time, but at some point, let's boost our revenue. Well, let's do MEV. So it's a matter of time. Okay, thank you very much, and let's talk in the hall. I will be. Yeah.